Ascendis has signed a large pharmaceutical deal, which hopefully will close next month ahead of a planned listing on the main board of the JSE sometime this year. A bit vague, but we'll find out more about that in a moment. With these acquisitions, the company will push up its number of employees to over 800 people and be having sales in the vicinity of 1.5 billion rand. Joining us now for more is Dr. Carsten Wellner, who's Chief Executive of Ascendis Health. Well, it's good to have you in the studio today, because we haven't seen too many new listings, certainly not in the pharmaceutical area. Your momentum, though, has been building. Earlier this month, you bought a big brand name, Solal. You didn't disclose the exact number, but with the two acquisitions, 300 million, what is Solal worth?
Yeah, we normally, when we acquire businesses, we always try to lump them in the press releases, because the sellers of the businesses, they don't want to really show what they have gotten for the acquisition. So that's the reason we were a bit vague. I agree with that.
But you're going to have a prospectus where you're going to have to define everything.
Going forward. But both together, the acquisitions we signed up, one was Maltons, which is a pet and accessories company, a market leader in its area, and the other one is Solar. And of course, Solar is the bigger one of the two acquisitions, which add up to around 300 million value of a business.
Carsten, it's Lindsay in Cape Town. There's been some cynics that have said that all you're doing is you're going on the acquisition trail, you're buying lots of companies, bolting them all together and creating a company to be listed on the JSE. And I don't know why they particularly think that's a bad thing, but they seem to. What would you say to them?
What we acquire is businesses in the area of, we call it health and care. It's not a typical healthcare business we have. We acquire businesses, strong brands in the vicinity of health and care companies, all around animal health, plant health, and human health. And the environment in South Africa is a little bit volatile on the healthcare market. We have potential delistings. We have the fight for the acquisition or the potential acquisition of Adcock Ingram. And we have the Cipla story. Lita was under cautionary for a certain time. So we think it's the right time for a new player in the market, which is not a typical player, not a typical healthcare player. That's why we say we are focusing on brands, on strong brands in health and care, because some of our brands are not typical healthcare brands. They are care brands, like our Maltons business, which is a pet accessory business. Our Nimue business, which is a cosmeceuticals or derma cosmeceuticals business, products which go to the dermatologist, products to go to beauty salons and so on. So it's not a classical healthcare player. We try to play a little bit between consumer brands and registered products with the Medical Control Council.
But I think the issue here and the questions that many investors have is, in the 1987 boom, we saw many companies coming to the market where they tacked a lot of businesses together. We saw the same thing in 97, 98. Yeah. What one is seeing from your business is many companies, a very strong acquisition trail. And there's things like culture, there's things like integration. Yeah. What makes it different in your case that the skeptics are concerned about?
First of all, we invest in defensible businesses. That's for us very important. Defensible business means for us strong brands who are somehow in a market, either in a market niche or in an area where they have established themselves as a strong leader. So our business model doesn't look for short-term gains like you sometimes can find in private equity. You restructure the business and after 4 or 5 years you sell the business. We have more a long-term approach. We want to build an operational business with strong brands in these areas. And of course there are synergies which you can find on a vertical side or a horizontal side. Horizontal synergies with bolt-ons to the business, and on the vertical side synergies where you increase the value chain by having a joint procurement for some of the businesses, having maybe a joint production and so on.
But we've heard that before. We hear that all the time. Yeah. I'm not getting the secret bullet or the silver bullet from you. Why are you going to be different?
We will be different because we are bringing together health aspects out of different areas of animal health, plant health, and human health. And we are not actually, if you look at our brands, these brands are very strong brands, South African brands. A lot of these products, when you go in the healthcare sector, a lot of products are imported. If you go in medical devices, a lot of products are imported. You are dependent on fluctuations in the exchange rate. Our brands, if you take Effecto is a brand which is probably 50 years in the South African market. Solal is a South African brand. Nimue is a South African brand. We're taking a South African brand outside of South Africa. If you take, for example, Nimue, we are more or less with 25, 28 international distributors already. If we repeat the success, what we have done with Nimue in South Africa and other markets, and we're already strong, we have our foot in the door, or actually not the foot, the whole leg in the door in the Scandinavian markets, very quality conscious markets. So I think the difference is really first, very strong brands, defensible, and playing in the health and in the care sector, not only in the classical healthcare sector. If you play only in pharma, you are restricted to many regulations. You have single exit pricing, you have a government intervention, which of course is right. You have to regulate the medical market, the pharma market, the classical pharma market. We are playing in a market where, let's say, nutraceuticals, sometimes they're called CAMS products, complementary alternative medicines. They are also regulated, and they will be more regulated in the future, but you still have the possibility with a good marketing mix, with good activities in the market to actually shape your business, decide your business. And that's the reason why we invest into strong brands. And all the brands we have invested in are either market leader or number 2 in the market, and are positioned quite well in the market going forward.
Carsten, would you say that it's, if you were, again, being cynical about it, would you say you're actually a consumer beauty business rather than a healthcare company? Because there's lots of talk about anti-aging this, and it seems to me there's a lot of sort of vanity products there. People like myself who try to stave off the ravages of old age, which creep up on me every single day. And if you are that type of company, do you think that this is appropriate for the South African market? In other words, do you think there's growth?
Our present investments are, and you're right in your statement, are more in the preventative space, in the space actually where you could call it, and we call it also in our division, consumer brands division. But we are at the moment actually doing a due diligence with a pharma company which will move us more into the intervention space. So yeah, you're right. So far our businesses are more on the consumer brand side, and a lot of our customers are big retail chains. The Discams of this world, the Pick and Pays of this world, Massmart. So all of them are actually our customers. Like I said, we have at the moment an acquisition running in the pharmaceutical side. We are at the moment still under cautionary or under non-disclosure agreement because we're doing the due diligence at the moment, and that will move us more into the intervention side than rather the preventative side. And yeah, you're right. So there's a lot of focus on consumer brands. And if I look at our present business, our biggest part of our business are consumer brands. And Solal plays a big role in that. And if you take the Effecto business, Effecto being a home and garden company, yes, you might ask, what does it have to do with pharmaceuticals or with health? But it's health for your garden, health for your house. And that's why we sometimes have a slogan. We say health for your home, health for you. That's actually what we're focusing on, which gives a little bit a different approach than to the classical concept where you have a pharma player which only concentrates on registered, medical control registered products. We are playing in that space of, yes, we're moving a little bit into the registered areas, but we are actually playing very big in the consumer brand sector, and that's actually our difference.
When one invests in a new listing, in a new company, obviously Gary Shane and Chris Dillon are well known in the investment markets with Coast to Coast. But I'd like to talk a bit about you. You were the fittest chief executive in South Africa in 2006, according to your website. Your website tells me that.
Yeah.
You're an Iron Man.
Yeah.
But you also were involved.
Living in Port Elizabeth, I think there were some years you had to do Ironman, otherwise you're not socially accepted because the whole town is doing Ironman, it looks like.
You should have gone and helped the local rugby team. They could have.
They probably needed more.
They needed a few.
But I'm not such a strong guy, so I'm rather the endurance guy.
But the question that has to hang over you is the involvement you had with the Competition Commission, with Adcock Ingram. And the fine that was levied, and you actually took advantage, one of the first people in South Africa, the company you worked for, Fresnius, taking advantage of the leniency program. Take us through that, because competition is very much in focus today with what's been happening in the construction industry. You didn't get fined, if my research is correct? Were you the one who went to the Competition Commission and said, we've been naughty boys, we want out?
It was a difficult time. We invested in Fresenius, a big multinational player with more than 140,000 employees worldwide and listed at the New York Stock Exchange in a double listing at the DAX in Frankfurt. Invested in South Africa already beginning of the 90s in a distributor in South African druggists. And you might recall South African druggists then actually sold off. They were sold to Aspen, and they had a plant in Port Elizabeth, which was bought by Macmed. So Aspen, Stephen Sart didn't want that plant, sold it all to Macmed. Macmed got bankrupt, and out of the liquidation, we bought actually the plant in Port Elizabeth. And with the liquidation, we bought a good plant with good dossiers, but also with some problems. And some problems were that actually going back already many, many years before, there were actually some talks in the vicinity of collusion and fixing one tender in the state sector in IV drips, which there was an oversupply between the two players at that time, South African druggists and Adcock Ingram. We actually went into that because we bought the company. We bought also with the company the managers of the company, and we went on with that for a certain time, and then we actually stopped it.
Sorry, you went on with the collusion?
Yeah, so that was probably for 3-4 years because the market was segmented. I came into the business, and we weren't a big player. At that time we were a small player. Adcock Ingram was the big player at that time. And yeah, in 2006, the Competition Commission knocked on our door. We took the leniency policy, and there were clear regulations on the leniency policy. What are the conditions as a company you can take leniency policy? We played all these things along. And I think in the law at that time there were 4 conditions. You weren't the instigator, you weren't the biggest player, you stopped actually the collusion, and you kept a secret of your talks.
So you're happy that you've come out of that clear?
So we came
clean.
completely cloud clean, the company and me personally. And I took at that time the stance to say, I come clean, put all the cards on the table, and we stopped that completely in 2004, 2005. So that's something which is now 12
Carsten,
years
just
back.
last one from me, if I can.
Yeah? Sorry?
Just when you do come to market, what would you say to an investment community? Would you say that you're a cyclical stock or you're a defensive stock? In other words, we talk about the financial health of the South African consumer. Do they take their health seriously enough to, even during bad times, still go on buying expensive supplements, etc.?
We are from a portfolio point of view defensible in the area that we say we want to have businesses which are somehow protected. Protected either by a regulatory environment, protected by a strong brand, or protected by very good education, very good quality of the products, a lot of scientific background of the product. Solal is a company which invests a lot in innovative new products. So from that side, that's what we call under defensible. Our growth strategy is based on 3 pillars, on synergetic growth, organic growth, and of course acquisitive growth. So if you look at our acquisitive growth, which we have shown in the last 2 years, it definitely doesn't look defensible. Defensible, you think about more slowing down and so on. But I think the brands what we have acquired in the last years, they are in per se defensible because they have proven their forte. They are good brands. They have weathered the storms in South Africa for many years. So from that side, yeah, it's from our growth strategy is not defensible, but the brands, the products are definitely defensible.
Dr. Carsten Wellner, the doctor not of, as one might think, of medical science, but a doctor of political
and economics.
Political, international politics and economics.
Yes.
Well, you've done pretty well here today, and we look forward to talking to you on the day that you list.
Thank you very much for the time
Lots
you
of
gave
interesting.
me.
Yeah, and how much money have you got? How much capital have you got still to play with?
Oh, that depends. When we find the deals, we have to raise the capital. Mm-hmm. For example, our listing, actually, we want to raise 400 million, which we're investing actually into new deals. We have lined up certain deals. And you know the market in South Africa, the banks are, of course, for certain reasons conservative. So you have to actually raise the funds on the stock market. And we think the stock market is the right place because we think our share, our story, which we actually putting onto the market is a convincing story because it's something new. It's something new. We're combining health and care products. And